All right, hello there. Um, just gonna try to explain what you were asking me about. Basically, the setup that you're referring to is called the 80% rule. And for an 80% rule, you want to spend 45 minutes above the previous day value area high. Or you want to spend 45 minutes below the previous day value area low. Or this can also apply to like the previous week value area low, previous week value area high, previous month, so on and so forth. Obviously, when you start dealing with the previous week, you're going to be looking at swing trades. Um, when you're looking at previous month, it's going to be an even further out swing trade. Um, these 80% rule can only work from one side to the other. So, for instance, today we didn't quite get the 45 minutes outside. We also did not get like a clean retest. But if you were paying attention in chat, I said when we retested here, I was like, oh, this is what we were waiting for, which is, this here, this arrow. It's kind of hard to see, but um, this is what I was waiting for, right? And that's exactly what happened. And so, um, unfortunately, sometimes they don't give us the retest, and that's not a reason to like throw caution out the wind. The retests confirm that value is being accepted back inside of this range. And the retest is going to, save you from taking basically more losing trades, if that makes sense. So, what we're looking for, again, 45 minutes outside, come back inside, have 3 5-minute candles close inside. And you want it to be clean. Like, you don't want them to keep wicking back above the level. And then you want it to come back up, retest. And at that point, you would take puts and you target the far side of the value, which is going to be the previous day value area low. If they came back inside previous day value area low, retested, then you would be targeting the far side, which is going to be your previous day value area high. Okay. Um, I don't know why I'm saying okay, like you can reply to me or something. Um, so that's the time where we're looking for 30 or for 45 minutes outside is when we're looking for price to go from one extreme to the other. So basically anytime that this setup happens, it's called an 80% rule because it will play out 80% of the time. Um, for any other trade, which is kind of what you're talking about, where um, what in the world? So like this here, I mean, you really did a good job. We broke below. The only thing I don't like in this setup is this one candle here that wicked back above this white candle on my chart, green candle on your chart. I don't like that we wicked back above the previous day value area low. But then after that, I mean, we had three, well, more than three, but we got at least our 3 5-minute candles closing cleanly below it without wicking back above, right? And then we came back up and retested. And there was also nothing wrong with your target. I kind of pointed out like there's a pretty good chance that we would bounce from here if we had come back down. Um, there seems to be like a pretty strong support level there, at least on the 5 minute. Um, but you also would not be wrong, targeting the previous week POC or VPOC. Um, just when you take a trade this size, you're going to get stopped out more than if you were taking a smaller trade. Um, but as long as you're using one risk to reward, it really doesn't matter. Like you shoot your shot, you take your trade, and sometimes it's going to work, sometimes it's not. And in this case, it went against you, but it's not because you did anything wrong. This is a great setup. So to basically clarify, the only thing that you would be looking for when you're not looking for 80% rule is if we're looking to break a level, we want to spend 3 5-minute candles above it, retest it, and then you would take calls. Or we're looking for breaking through a level, 3 5-minute candles below, retest, take puts. Um, the other type of trade that you can look for is like coming up to a level, bouncing or rejecting, I'm sorry, in this case, rejecting, and then coming back to that level. And then you could take puts at the top here. And then this, it's a pretty common pattern. This is a double top. Um, but so for like a double top like that, you want to see like, um, I'm trying to look for an example here. I mean, I guess we could use this where it's like, this was our first test, right? If you ignore the fact that we broke through the level, had our 3 5 minute candles retested here, this is really where you would take calls. But let's just say you miss that and then it comes over here and retests here. This is your double bottom. So this is where you would take calls. Um, but so those are really the setups that you want to watch for. Break a level, 3 5 minute candles, retest calls. Break below a level, 3 5 minute candles, retest puts. 80% rule, you spend 45 minutes outside of either previous day value area high or any value area high or any value area low. Come back inside, 3 5 minute candles, retest that level, take calls, and then you target the far extreme every single time. Um, and we kind of had it happen. Kind of. It wasn't like a perfect setup, but I was watching it happen live, and I was pretty sure it was going to play out just based on the way volume was coming in and everything. So I would have taken it, and I kind of called it out live. But if you're wanting to do this correctly, you really want to wait for the proper setup, which is breaking back inside, retesting, taking puts. Okay. Hopefully this helps you out. Um, I'm glad you're reading the books. I'll look forward to doing a one-on-one with you when you finish. All right. Bye.